Hello traders, it's Thursday, August the 4th, and this is our New York Session Market Review, which begins in London. All morning speculators were driving short positions on the pound to record highs as Britain's central bank prepared to cut interest rates for the first time in 7 years. Last month, the bank shocked investors by standing pat on monetary policy, but now the data is in for the post-Brexit mood, and it's not pretty. Confidence, PMIs, projections all say the same thing. And Mark Carney et al. Simply had little choice. So far, the 25 base point cut has resulted in an immediate surge in the pound, which responded by fluctuating 200 pips in a space of 5 minutes. It now seems to be heading for its post-Brexit lows. Throughout the continent this morning, shares have been rising, especially on a lower euro following the US's impressive ADP job count yesterday. Yesterday's PMIs came in mostly as expected, the zone's composite and services even rising above projections. Meanwhile, the European Union has hit both China and Russia with anti-dumping tariffs up to 36% after both countries have been accused of undercutting European steel firms by selling produce below production cost. Still, Asian equities advanced overnight, with the Nikkei actually falling towards closing time on rising yen. That was a result of disappointment in Shinzo Abe's disappointing stimulus proposal. Nikkei futures at the moment are up 0.62%, and the yen has corrected down a tenth. US equity futures held quite steady throughout the morning as investors closely watched oil and the Bank of England. The Dow Jones Industrial yesterday broke a 6-day losing streak, closing up nearly 0.25%, with the S&P up a third. Yesterday saw some good labour reports ahead of tomorrow's NFP and pleasing PMIs, which even managed to exceed expectations. Still, a report from Reuters this morning shows small business borrowing rising slower than what an expanding economy would expect. The provider's PayNet index, which tends to predict GDP growth by 1 to 2 quarters, is speaking of a 5% reduction in lending year on year. Crude oil is on its way down again as Europe hits its second wind and America prepares to open. While most analysts don't expect a repeat of Q1 lows below 30, yesterday's crude oil reports bodes bad for prices. Meanwhile, Uber producer Saudi Arabia, hit hard by loss-bearing prices, has won praise from the IMF. In October, the organization warned that the kingdom was on the verge of bankruptcy. It is now readjusting its projections to a budget deficit that is a mere 9.6% of economic output. This thanks to Saudi plans of additional taxation, privatization, and cutting the public sector bill. And gold is traveling back sharply upwards towards the 1364 resistance mark it's failed to breach over the past 2 days, powered forward by wildly fluctuating pounds. Still ahead today, jobless claims from the US at 12:30 GMT, Japanese foreign reserves at 10 to midnight, and a policy statement from Australia's central bank at 1:30 a.m. tomorrow morning. We'll see you again at our next London session. Until then, have a great trading day.